Welcome, everyone. Today we are looking at Topic 8 in your SS1 accounting series, Trial Balance. This is a very important topic. The trial balance is a statement that checks the accuracy of the ledger. It is prepared at the end of each period. This topic is guaranteed to appear in your examinations. You must understand how to prepare a trial balance and how to interpret it. Pay close attention. Let us begin. First, let me explain what a trial balance is. A trial balance is a statement that lists all the ledger account balances. It is prepared at the end of an accounting period. It has two columns. The debit column lists all the accounts with debit balances. The credit column lists all the accounts with credit balances. The total of the debit column should equal the total of the credit column. If the totals are equal, the ledger is said to be in balance. This indicates that the double entry system has been correctly applied. However, equality of totals does not guarantee that there are no errors. Some errors do not affect the trial balance. Understanding the trial balance is essential for checking the accuracy of the ledger. This is a key concept. Now let me explain the purpose of a trial balance. The trial balance serves several important purposes. The first purpose is to check the accuracy of the ledger. It ensures that the total debits equal the total credits. This is a basic check on the double entry system. The second purpose is to detect errors. It helps to identify errors in the ledger. The third purpose is to provide a summary. It provides a summary of all the account balances. The fourth purpose is to prepare financial statements. The trial balance is used to prepare the income statement and the balance sheet. The fifth purpose is to facilitate adjustments. It provides a basis for adjusting entries. The sixth purpose is to provide information. It provides information for management. Understanding the purpose of a trial balance is essential for understanding its importance. This is frequently tested. Now let me explain the format of a trial balance. The trial balance has a specific format. It has three columns. The first column is the particulars column. It lists the names of the accounts. The second column is the debit column. It records the debit balances of the accounts. The third column is the credit column. It records the credit balances of the accounts. The accounts are listed in a specific order. They are listed in the order of the ledger. The assets are listed first. The liabilities are listed second. The capital is listed third. The revenue is listed fourth. The expenses are listed fifth. The total of the debit column is calculated. The total of the credit column is calculated. The two totals should be equal. Understanding the format of a trial balance is essential for preparing it. This is a practical skill. Now let me explain the steps in preparing a trial balance. There are several steps. The first step is to list all the ledger accounts. This includes all the accounts in the general ledger. The second step is to determine the balance of each account. This is done by balancing the account. The third step is to classify each balance as debit or credit. Assets and expenses have debit balances. Liabilities, capital, and revenue have credit balances. The fourth step is to enter the balances in the trial balance. Debit balances are entered in the debit column. Credit balances are entered in the credit column. The fifth step is to total the debit column. The sixth step is to total the credit column. The seventh step is to compare the totals. They should be equal. Understanding these steps is essential for preparing a trial balance. This is a key skill. Now, let me explain the rules for determining debit and credit balances. There are specific rules. Assets have debit balances. Examples include cash, land, buildings, and machinery. Liabilities have credit balances. Examples include loans, creditors, and overdrafts. Capital has a credit balance. Revenue has a credit balance. Examples include sales and interest received. Expenses have debit balances. Examples include rent, salaries, and purchases. Drawings have a debit balance. The rules are based on the accounting equation. Assets equal liabilities plus owner's equity. Assets are on the left side of the equation. They have debit balances. Liabilities and equity are on the right side. They have credit balances. Understanding these rules is essential for preparing a trial balance. This is frequently tested. Now let me explain the limitations of a trial balance. The trial balance has several limitations. The first limitation is that it does not detect all errors. Some errors do not affect the trial balance. These are called errors that are not disclosed by the trial balance. The second limitation is that it does not indicate the accuracy of the accounts. Even if the trial balance balances, there may still be errors. The third limitation is that it does not provide detailed information. It only provides summary information. The fourth limitation is that it does not show the financial position. It is not a financial statement. The fifth limitation is that it does not show the performance of the business. It does not show profit or loss. Understanding the limitations of a trial balance is essential for interpreting it correctly. This is frequently tested. Now, let me explain the errors that are disclosed by the trial balance. Some errors are disclosed by the trial balance. These errors cause the trial balance not to balance. The first type is an error in posting. This occurs when a transaction is posted incorrectly. For example, a debit is posted as a credit. The second type is an error in addition. This occurs when the totals are added incorrectly. The third type is an error in balance. This occurs when the balance is calculated incorrectly. The fourth type is an error in omission. This occurs when a transaction is omitted from the ledger. The fifth type is an error in commission. This occurs when the wrong account is used. Understanding these errors is essential for detecting and correcting them. This is a key concept. Now let me explain the errors that are not disclosed by the trial balance. Some errors are not disclosed by the trial balance. These errors do not cause the trial balance to be unbalanced. The first type is an error of omission. This occurs when a transaction is completely omitted from the books. Both the debit and credit are omitted. The trial balance still balances. The second type is an error of commission. This occurs when the correct amount is entered in the wrong account. The trial balance still balances. The third type is an error of principal. This occurs when the wrong type of account is used. For example, a capital expenditure is recorded as a revenue expenditure. The trial balance still balances. The fourth type is an error of original entry. This occurs when the wrong amount is recorded in the books of original entry. The trial balance still balances. The fifth type is a compensating error. This occurs when two errors cancel each other out. Understanding these errors is essential for identifying and correcting them. This is frequently tested. Now let me explain the difference between a trial balance and a balance sheet. Many students confuse these two statements. Let me clarify the difference. A trial balance is a list of all ledger account balances. It is used to check the accuracy of the ledger. It is prepared at the end of each period. A balance sheet is a financial statement. It shows the financial position of a business. It shows assets, liabilities, and owner's equity. The trial balance is used to prepare the balance sheet. The trial balance is not a financial statement. The balance sheet is a financial statement. The trial balance is for internal use. The balance sheet is for external use. Understanding this difference is essential for understanding the accounting process. This is frequently tested. Now, let me explain the difference between a trial balance and a trading account. The trading account is used to calculate gross profit. It is a financial statement. The trial balance is used to prepare the trading account. The trading account shows the cost of goods sold and sales. The trial balance shows all account balances. The trading account is part of the income statement. The trial balance is a working paper. The trading account is prepared after the trial balance. Understanding this difference is essential for understanding the accounting process. This is a key concept. Now, let me give you sample exam questions to prepare you for your test. What is a trial balance? A trial balance is a statement that lists all the ledger account balances. State the purpose of a trial balance. To check the accuracy of the ledger, detect errors, provide a summary, prepare financial statements, facilitate adjustments, and provide information. What are the columns in a trial balance? the particulars column, the debit column, and the credit column. List the rules for determining debit and credit balances. Assets and expenses have debit balances. Liabilities, capital, and revenue have credit balances. State the limitations of a trial balance. It does not detect all errors, does not indicate accuracy, does not provide detailed information, does not show financial position, and does not show performance. What are errors disclosed by the trial balance? Errors in posting, addition, balance, omission, and commission. What are errors not disclosed by the trial balance? Errors of omission, commission, principal, original entry, and compensating errors. Explain the difference between a trial balance and a balance sheet. A trial balance lists ledger balances. A balance sheet shows financial position. Let me summarize everything we have covered today. A trial balance is a statement that lists all ledger account balances. It has a debit column and a credit column. The totals should be equal. The purpose of a trial balance is to check the accuracy of the ledger. Assets and expenses have debit balances. Liabilities, capital, and revenue have credit balances. The trial balance has limitations. It does not detect all errors. Errors disclosed by the trial balance include errors in posting and addition. Errors not disclosed include errors of omission and commission. The trial balance is different from the balance sheet. The trial balance lists ledger balances. The balance sheet shows financial position. Understanding the trial balance is essential for accounting. This is topic 8 in your SS1 accounting series. Study it well. It is guaranteed to appear in your examinations. Well done.